The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. And I wanted to bring to your attention that we have a full moon today. It is also my grandson's birthday. He's 15 years old. His name is Chase Moon Doyle. He was born exactly at the full moon in 2000. And I was getting ready. It was 7:06 p.m. and I just started playing a poker tournament. And I actually won that tournament. It wasn't a big one, but it was enough to go out to eat a couple times. And he's 15 years old. Hard to believe. Time goes so fast. It was really interesting that we have a situation now that John Logan was talking about. I mean, I got ready to do all this, and then I was listening to his show, and he brought up, ExxonMobil. So what I would like to do is to go through what I see happening technically. I don't know if it'll mean anything fundamental, but technically, here's what we're looking at on ExxonMobil. If you go back to the low we made back in 2009, that was the collapse. Then the market rallied a little bit and then came down and made a butterfly pattern perfectly into July of 2010. And from that point, it went from 55, doubled in price to 106. And as you can see, when it was making the high back in 2014, it was making a 3 drive to a top pattern. It was perfectly symmetrical, A, B, C, D. Why these things work this way, I have no idea. All I know is that you see them more often than not. And now what you've seen happening in ExxonMobil is we have a major support at the 61% retracement and also at the 786 retracement. Now, John was saying he was getting, green flags popping up. They're not green yet, but they're light lime colored. And he said that there's a possibility of a bottoming here in ExxonMobil, which is, I believe, the second largest held stock in the world after Apple. But we've had a weekly reversal here, folks. We've actually took out the low of last week, and now we've taken out the high of last week. That usually means something, especially coming in at these really key numbers. So this is certainly should be on the radar. For watch this stock, because nobody wants it. I mean, everybody knows that oil's going to $30. I mean, you don't have to be a rocket scientist to figure that out. We made new lows yesterday, so who knows where it's going to go from that level. Now, what I'd like to do is to start out just showing you, we'll start out in the crude oil. And we'll just move that one over here. Just give me a second here. I'm going to put these in on so you can see it on a little bit a shorter time frame, the patterns that I'm looking at, and that because they hit absolutely perfectly last night, and that is the crude oil went exactly down to the 1.618 expansion to the exact penny, and from that spot we've already rallied $1 a barrel. We only pulled off to a 382 retracement after that little bit. So this is the first sign that there's a possible, low coming in here in crude oil. We've made this is over the last 2 weeks now. We made a 3 drive to a bottom pattern from August the 2nd to the 9th and the 9th to the 14th. There's that cycle that's in there, and that was a perfectly symmetrical A, B, C, D 3 drive to a bottom pattern. So that's the first thing that we want to look at. Okay, so we're going to look at the whole complex to see what we're watching here. Now the next thing we're going to do is we're going to look here at the heating oil, because heating oil, being one of the components after they crack the gasoline or the crude oil. We'll get the rest of it here. Hold on one second here. We'll put up we got a question coming in. And hold on, there we go. We've got heating oil up here, and we have a question from someone. Yes, it's a new. Oh, it's a. You're absolutely correct. It's not a full moon. It's a new moon. I'm sorry. my grandson was born on a new moon too, so my daughter is very into the astrological stuff, and so that's why she named him Moon. And he gets a lot of flack, but he handles it really well. So he's 15, and he already performs in a little band at two of the coffee shops in San Luis Obispo. He's very good. So anyway, this is what we're looking at now with the heating oil. You can see now we've made higher bottoms than we did back on the 5th. And I'm going too fast on the charts. I will slow down for you, everyone, and try to do them slower. Okay, the one we're looking at now is on heating oil. And as you can see, we've made a higher bottom than we did on August 5th, 9 days ago. So that's another positive sign that we're looking at a possible bottom coming in oil. So only crude oil thus far has only made the newer low, only crude oil. Now the next one we want to look at is something that we all use, and that is gasoline. Holy moly guacamole, this thing's really, well, you talk about steroids, this is the commodity that has it. It moves around a lot. Now we're going to take a look at gasoline now on a hourly chart, and we're going to go back and look at it over the past months. And if you'll remember, I'm going to show you something that happened once before, because markets tend to repeat themselves. And so we're going to take a look now at the 60-minute chart on gasoline futures. And as you can see, we bottomed on August the 7th. We rallied up to the 61% retracement of the high in July, and now we've backed off to a 61% retracement to the low that we made back on August the 5th. Now you notice that we have higher bottoms coming in here now, which is rather important, so we want to watch that. Now the next thing you want to do is you want to look historically what happened the last time that we had a big bottom in oil. Okay, now what I'm going to do is to show you what this looks like on the, hold on one second here, so I can get the daily gasoline chart up, and you can see the daily gasoline chart is still higher than it was, much higher than it was back in January. Now we remember we bottomed in crude oil in March. That's when we made the $42, and then by that time gasoline had already moved from $1.20 to $2.19, and now we're back to $1.68. So it's making higher bottoms. So we have some pretty interesting things here happening in the oil market, along with Exxon Mobil making a weekly reversal at the 618 and 786. We have a non-confirmation of heating oil making a bottom. We have non-confirmation, at least yet, of the gasoline making a bottom. So this is these are I would think the yellow flags come up, as John Logan would probably designate them, and he's starting to see things on the market profile in ExxonMobil that might be telling us that we might be looking at a little bit of a bottom here in the crude oil market. Now, whether it's going to be a major bottom or not, one has to, wait and see. But we'll just it moves 2 cents. This thing moves so fast that it moves 2 cents a gallon in a matter of seconds. It makes the NASDAQ look like it's molasses. So it's really a wild one for trading gasoline. So be really careful in there if you are trading in this. And so we're watching this as a potential turn. Now, crude oil is certainly the one to watch. We bottomed last night a little below $42 a barrel. Actually, quite a bit below. I think it was $41.50 or something like that. And then we've had a dollar rally, which is, basically nothing, in this. But we're seeing signs. These are just the beginning signs that there's a possibility that there could be something, different, happening in some of these things. So these are the ones that we want to be, watching, very, very closely. So it hasn't happened yet, but it's getting closer and closer as we watch this thing go through the time. Now, I wanted to switch over and show you what happened in the German DAX last night, because it's had a really wild swings so far, and it has completed a potential. And remember, we're over a new moon, so we've got to pay really close attention to this. But last night we had a big rally that went up to the 61% retracement in the DAX, and then we broke a little over 200. Let me see. We know it's 11,000. We broke 200 points down to the ABCD move, and since that time we've rallied about 80 points off of the DAX. Now, this is just the German DAX, but believe me, folks, this thing really trades just exactly like the S&P. The difference is that it is 10 times as volatile, and the reason is the margin on a DAX, full DAX contract is 20,000 euros. So, that's like 5 times what it is for the E-mini S&P. So it does jump around. What the DAX is, it's basically what the S&P 500 was back when we first started trading it on August the 16th of 1982. The value of it was $500 per point. So, that was like trading 10 E-minis. Well, with the volume the way it is now, and the fact that the E-mini it's trading at 2,000 instead of 100, where it was back in 1983, that's 1982, there's a big difference. On August the 16th of 1982, Leo Malamed had to come down onto the floor of the exchange and grab people from other pits to take them into the S&P pit to get their pictures taken for the original first trades in the S&P. There was nobody in the pit. The futures opened at about 101, I believe, 102, somewhere in that ballpark. Cash was trading at 103, and cash traded below futures all the way through the end of August. And August the 9th was the big bottom. August 82, August the 9th was the big bottom in the stock market. The Dow hit 550, I believe, and from then, the Dow, went up to 18,000 and change, and the S&P went to 2,100. So those are the types of things, that I remember. But the volatility here in the DAX is just, it's just huge. But it's a wonderful thing to trade. You have to use about a 30 pip stop, which is $750. But when you're right, it pays you, big dividends. And when you're wrong, it spanks you big time. So you've got to remember that. Okay, we're going to have to take a little break here, I believe, because we're coming up to the first break, and then we get back. I want to go into the bonds a little bit and talk a little bit about those. So we'll be right back after these few words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, and as we were on the air speaking, gasoline dropped $2 a gallon. Crude oil went up and made a new high, but gasoline is still under a great deal of pressure. Heating oil still holding up okay, but gasoline is the weak sister in the group, and it's still higher on on the longer term charts, but daily today it's getting banged up pretty good. Now I've asked to take a look before we get to the bonds, to take a look at the currency markets. The first one that I've posted in is for the euro, and as you can see, last night we rallied up to a 786 retracement of the previous day's high. We actually went a few pips higher to go to 0.84, which is one of the reciprocal of the ratios that we look at. The difference between 786 and 0.84 is basically insignificant for trading, but this software is so sensitive because it goes out to the 100th decimal point that you can see that the ratio was 0.84, not 0.786. But for trading purposes, you can't get you cannot try to massage it and be that accurate. You just got to get close to 786. Much like when you look at 707 and 618, they're very, very close. So keep those in mind, when you're watching these. Now, the one of the things that I wanted to mention was the other currencies that we wanted to take a look at, and the main one after this that is always on people's watch list is the Japanese yen, and we'll bring this up to let you folks take a look at it, and you'll see that we had a really interesting pattern here happen over the past several days. It came in yesterday, and I wanted to make an announcement here. And first of all, let me put the Japanese yen chart in, and as you can see, we hit that 20-man line again yesterday. Then we backed off to almost a 786 retracement, and here you'll see where the low is exactly 707, and what that's telling you is that it's held that level, and now what we're getting ready to do is to see if it's going to go up and complete the ABCD pattern back up to the 20-man line and try to test it again. So that's what I wanted to mention. And also, we're going to have Jim Twentyman, my good friend of 50 years ago. He was my first commodity broker back at Clayton Brokerage in Los Angeles back in 1965. And Jim's going to be our guest, and we're going to chat about some of the old times. Jim is an expert in GAN. He spent well over a year and a half working full-time studying with GAN. He's the man who has given me the idea about harmonic numbers. He is an expert at those things, and he's really a nice guy. And to have him on the radio show should be a lot of fun. So if you have any questions for Jim Twentyman, be sure to come on the show Tuesday, and we'll have him on, and we'll see how he performs under pressure of the big what do they call it, the big lights or the big city, what was the big tent, under the big tent. So we'll see how that works. Okay, now that was the Japanese yen. Now we want to take a quick look here also at the British pound, and then when we come back from the break, we will certainly get into the stock market stuff and also bonds. But it looks to me like the pound is getting ready to break out here. I don't know if it's going to break out right away. Let's do the daily so we can see it a little bit clearer. Well, not yet. It still has this head and shoulders pattern that's still active, but it's having a lot of resistance at 157 here in the British pound. And as you can see here, that we needed to get above 157.70. The head and shoulders pattern that you can see has been working well. We went down and made an ABCD from that level, and now what we've done is we've rallied back. So whether this is going to be the secondary leg that takes us up or not remains to be seen. But you've got to get strength moving. Otherwise, you're going to be looking at a market that'll probably, start to sell off, a little bit more. But it's still a bit early in the game, so you want to be able to see what happens to it. We're going to have a break here again for the longer break. But what we want to do is come back and we'll talk a little bit about the stock market and some of the things that I'm seeing in it, and whether you see the same thing or not. We'll have to wait and see, but it's going to be very interesting to say the least. So I believe we have a break coming up now. I don't hear any music, but it should be here right now. We have a question, but we'll hold it till after the break. Of course, it has to be on our most favorite stock, second favorite, Priceline.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're getting a little bit of a bounce back here in stocks, almost back to the green line. The first chart that I'm going to show is the breadth that we look at each day. You can see the advanced decline line has still been, heading to the downside, and also your advancing volume versus declining volume. But if you look at the far right side of the breadth chart here, you'll notice that the high-low of the New York Stock Exchange, you'll notice it just continues to make new lows every day since July. I know we're incredibly oversold now. The Dow has been down 10 of the last 12 trading days. So we are, we could have a really good rally. I mean, we've had good rallies through here. The question is they're going to last, but the overall structure of the market is incredibly weak. It really is very, very weak. And this is a debt cycle that we're dealing with. It's not an overvaluation in stock by any stretch of the imagination. This is about debt and what's going on, in the bond markets. And, those are the things that that I'm following is what I think will be the big move of whenever we see, something happen, with these things. Well, crude oil's rallied almost $1 a barrel since we've been on the air. Holy cow. Holy moly guacamole. Okay, now we're going to take a look here at the bond market. We're going to look at the 30-year bond after we made the big three-drive pattern up at the 160 level. We're now 3 handles lower at 157.15. We made a 382 retracement last night in the bonds up at the 158.20 level. Took them almost a full day to make a 382 retracement, which was a sign of weakness. And now we're approaching the lows that we made yesterday. And if this is in fact, and we just took out the lows of yesterday. And if this is part of an ABCD structure, you'll see here on the next chart that we're looking at the next move in bonds down another 2 handles to the 155.10 level. So these are very, very bearish markets, folks, and they're just starting to pick up steam. Remember, we were up 8 weeks in bonds, so this is only the second day down from the top, and already we're down 3 handles, and it looks like we've got another 3 handles, another 2 handles to go just to complete this ABCD pattern that we have going. Now, maybe this is where people are getting out of bonds and getting into stocks. I'm not sure, but it doesn't show that with the breadth statistics that we're looking at. That's one of the things that we have to be watching at, and just keep it in mind that that's the way it is. So we have a pretty good rally going now. We got the stock market back up again after making the lower bottom there. So everything is all copacetic so far. We've made the 61% retracement of yesterday's mid-high range, and the Nasdaq is still quite a bit under it, and actually it did it also. Nasdaq just made the 61% retracement of the previous day's range also. So just keep an eye on it. This is being a Friday on a full moon. Let's try it again on a new moon. This has a potential to be a pretty significant bottoming process in here, because we did make the ABCD in the DAX, as you can see, and also we've been looking at some of these things possibly turning that have been holding the market back. One is the oil complex, because if the oil complex would turn around, this would be the excuse they would use to say that maybe this selling is over in oil, and you could get a big rally in stocks just based on that. So those are the things that I'm watching from a shorter term perspective. Longer term, we are going lower. The question is how much lower and when. This is yesterday was a pretty key cycle date. Maybe it came in a day later here with the new moon, but it's going to be interesting here these next few days. How much the market is going to rally, and to what extent it's going to rally. So overall, it's very, very bearish, folks. The breadth certificates, let's try it again. The breadth statistics are as bad as I have ever seen, and it is basically gone unnoticed by anyone. There's some people talk about it, but the volatility index is not showing anything like this at all. So all of those things are telling us that we have a situation that is really, really combustible. Almost like that terrible tragedy that they had in China, where they had a bunch of explosives and flammable materials all in one place, and when it blew up, it was almost like Hiroshima going off. It was really, really spectacular. If you had a chance to see that on YouTube. By the way, I mentioned the article about zero hedge from Phoenix Capital. If you get a chance, go into zerohedge.com and look at the article on Phoenix Capital. It explains very succinctly what is happening with their devaluation. Now, my good friend Mark Faber, who worked with me at Drexel many years ago, back from 76 through 82 when I was there, says that this devaluation is really insignificant because it's such a small amount, only a few percent, but they did it twice in 1 week, which I think is rather startling, and it's a sign that they want to make their exports cheaper, and that's usually not a good thing. So keep this in mind as we're watching some of these things unfold here. So we live in interesting times. That's a Chinese curse, by the way, so keep that on your front burner to let you know that these things jump around quite a bit. We've got a lot of selling that's happened in stocks, and people are not buying them. I don't know. There's only 10 of those stocks that we've talked about many times. Google, Microsoft, Gilead, Apple. These are the ones that people have been putting their things in, and some of those have actually turned around too. So that's another instance where you want to be really careful of thinking that stocks are really strong, and when in fact they are not nearly as strong as you might think. Now, I want to take a quick look here at the gold market, because short term we've had some a pretty good run here, an ABCD pattern completed up here at the 1127 level, and from that we've broken down, and today's high was a 61% retracement of yesterday's high so far. It's still rather early in the day, but that's what's happened, so far, with the gold. So silver has done pretty much the same thing. It had a lot of resistance up there at the 1557 level. We backed off to 1532 last night and went back up to the 1550 level. So I believe we're in a consolidation here in gold, getting ready for a retracement to form the next leg up. And this is nothing more than a short covering rally based on the fact that we have a lot of hedge funds that are short, and the market does not allow them to get out. I mean, ever since they went short, which was back on the 27th of July, the 27th and 28th of July is when we had those huge increases in open interest on the short side. Well, for every short there's got to be a long, but because the market was down so dramatically, the shorts were in control, but they've been underwater ever since that time. It bottomed at 1065 and immediately popped above 1080, and since that time it's going to be going to go higher and higher, what it looks like from this. So we'll keep this in mind for what we're looking at here, but this is what gold and silver look like. They still want to go higher. The last short covering rally we had, major one, back in March, went $180 an ounce. So far, we've only gone $60 an ounce. So this is something that we've got to pay attention to, but that's neither here nor there. Okay. One other question. Someone's asked a question about Gilead. Since we mentioned it, let me pull it up and we will take a look at it. And it is one of the big ones, and it's held up relatively well through this area here. And you'll see that it's made an ABCD pattern here. Back on the 27th of July. It was a perfect ABCD pattern. We went up and made a 786 retracement, and now we're in a trading range between 120 and 113. That's basically what it's looked at. Nothing major topping-wise, but it has completed a big ABCD correction. Then it made a 61% retracement, so it's doing pretty much what it's supposed to be doing, and that's all you can say about it. So we got stocks still coming back pretty good. I wouldn't be surprised to see them make a strong close today, and but by the same token, they could close very, very weak today also. Just just be nimble, be very, very nimble, as Art Cashin says, because these are the things that can get you in trouble with this. With the S&P, we had a really big target down here that it didn't quite make as of yet. I'll put this up here so you can see that we've been I was looking for the low to come in around 2066 today, that has not happened as of yet. But being the fact that this is a new moon day, it's still kind of early. But what we've done now is we've rallied back to the 61% retracement of the high that we made midday yesterday, and we really didn't make an ABCD to the downside on this, so as of yet. But wow, we sure did. I'm sorry, I missed that. Let me put this 15-minute in, and you'll see we did make an ABCD there at that 2075 level. So that's what we're watching here. This maybe I'm putting too much emphasis on the fact that this market is in such bad shape. I mean, when you look at and I'm not just talking about the death cross, because I don't use moving averages like that, and I haven't really studied the death cross, which is where the 50-day and the 200-day moving average are all turning lower, and stocks are below that, which we are in the Dow and the S&P and the New York Stock Exchange Index, but not with the NASDAQ. So that's what that means, and I'm not sure. All I know is the overall structure of the market, the advanced decline lines and new highs to new lows, is not very good. I mean, it's showing you the breadth of the market is very, very poor, and history says when that happens, the market, wants to go lower. What will probably happen is we'll probably have a shock in here somewhere where someone comes in and says something about China, or maybe a devaluation from Japan again, because they're being hurt by the Chinese renminbi devaluation. So these are the things that you want to keep in mind. That we start a currency war, but we're not seeing that. As you can see from the euro that there's no fear in the currency pits either. You don't see any wild fluctuations anywhere. I mean, you remember what happened with the Swiss franc when they broke away from the euro about a year and a half ago, when it dropped $25,000, in one day. Well, it took 6 months to get it back to where it was before, but the market went higher than it was after they pulled away from the euro. So this is the kind of thing that you have to look at when you're following some of these currencies, because they can get rather crazy. Now, the Australian dollar, we mentioned that earlier this week, has held the bottoms around that 72 level, and that's another sign that possibly these oil stocks, because it's heavily weighted in Australia with their oil exports into China. So that could be another reason that oil might be getting ready to have a substantial rally. And folks, that's all it would be. I mean, we could rally up to 46 or 47 or even $50 a barrel, and that's all it is a rally into a bear market. We have commodity prices are, they are going lower. I don't know where the bottom is, but they're heading lower. All we're doing is looking at a shorter time frame to see if there's a tradable situation based on, what we're seeing with Exxon, because of, John Logan talking to us about the market profile. And that's another good thing. If this doesn't work, we can blame this directly on John Logan. I don't have to take responsibility for this. I'll say, well, I wouldn't even want to do this except for John Logan wanted me to do it. No, I wouldn't do that. But anyway, it's got a potential here. Now, over the last 12 hours or so, actually 24 hours of trading in the stocks, we've got lower tops since we made the first higher high. We really need to get the S&P above the 2087 level, and then that would be the spot where we would be looking at potential for the market to have a pretty good rally from that level. The first indication would be above 2084, and then beyond that would be the 2087 level. But we're coming into some real serious stuff. Take a little break here, and we'll wind up the show in just a few minutes. We have one other question.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we have a caller from Chicago about the Japanese yen. Robert, are you there?
The yen earlier. Are you expecting it to go toward 126, 127?
Yes, I think it's got a chance, and the reason for that, Robert, is the fact that it didn't back off very much. You know, we've only backed off about 1.5 points, 150 pips here over the last few days, and we're trading up near the 786 retracement right now. And as you can see, you know, from the chart that I posted in the room a little bit earlier, I'll put it in again, and that is that we have we've had a pretty strong rally off the bottom here, but I think it's going to have a lot of trouble in the area of 125. That's where I think it'll do. But if we clear 125, then we could be looking at 130 without any trouble here in the end. But it's got to clear 125, 20 or so, closing above there, about 100 pips from where we are now. And then that would give us the spot to be looking for a place to, to sell it short. So that's what I'm seeing right now.
Okay, so you wouldn't expect it to go towards 126 or 120?
No, not yet. No,
okay.
It's still going to have a lot of trouble. Just even, fact is we've had lower highs in here, and all we're doing now is making a 61% retracement of yesterday's range. That's all we've done so far today. It moves a lot, as you probably already know. It'll move, almost as erratic as, well, it's not erratic, but it moves in beautiful harmony, much like the euro does, but it is very active. I mean, it's something you have to pay attention to, if you're trading this, because it can be, very, very, very volatile.
What would make it? What do you think would make it go towards 120, 121, 120, 122?
More sellers.
Right.
I don't know the fundamentals of it, but
yeah, sure. Okay.
who knows? But I would say something, there'd have to be some type of an economic change in thought, where people are thinking one way, and now it could be an interest rate. Maybe that the Fed comes in and drops interest rates. Maybe that would do it. I don't know, but who knows?
Okay.
Listen, thank you for calling in, Robert, and have a wonderful weekend.
Okay, thanks so much.
You bet. Live every day in an attitude of gratitude, folks, and do something fine and nice for somebody that has less than you today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.